Is it time to start buying semiconductor stocks? We're going to look at the semiconductor industry as a whole, plus we're going to dive deep into AMD, that's Advanced Micro Devices, and Nvidia, stock symbol NVDA. Now, semiconductor stocks as a whole have lagged the overall market bounce over the past 4 days, especially when you compare it to the NASDAQ 100, which is QQQ. The NASDAQ 100 has bounced 6.8%, semis have only bounced 6.5%. And then when you compare it to like an industry like software stocks have rallied on average 10.8%. Semiconductors are notably behind that, again at 6.5%. So is it going to do a little bit of catch up here? We're coming into the CPI report. I think there's a big disconnect right now between the current state of the stock market and what it expects out of the Fed going forward. There's still this belief that there's going to be a Fed pivot, that if inflation comes down just a little bit, that the Fed will pivot and start cutting interest rates. That's not going to happen. They've made their intentions known on this matter, so I don't have any confidence that they're actually going to be doing that anytime soon. And I think the market has this misplaced optimism as a result. So even if we think the semiconductors are in a good place to rally right now, I'm not so sure that the market's in a good place to continue the rally that we've seen over the last 4 days. Yes, it may continue for a couple more days, but ultimately I think there's a lot lower pricing that has to be realized in the broader indices before we finally get that bottom. So if that is to happen, then you're going to see more pressure on the semiconductor industry as a whole. But let's take a look at the semis. Let's also take a deep look into AMD and Nvidia. First off, let's take a look at SMH. Now, why do I like to look at SMH first before I get into the actual semis? Well, so much of what you get out of an individual stock is a direct result of how the overall industry is doing. If the industry is bullish, there's a very good chance that the stock you're trading is going to be bullish. If the industry is bearish, there's a good chance that there's going to be a lot of selling pressures on that stock that you're looking to trade. And so if you see a really good trade setup in a particular industry, and then when you look at the industry chart and the industry chart is looking actually bearish, that might be your red flag to say, hey, maybe I shouldn't be trading this stock because the industry isn't really supporting a move to the upside. So we want to look at SMH here, then get into the individual stocks. So looking at SMH, the first thing that jumps out to me is this declining trend line going all the way back to the January highs. Now, this trend line wasn't always this flat. It was actually, I mean, it's not flat, but it was much more steep back before the rally off of the June lows. And then we broke the June lows, and then that trend line became a little flatter. Now, it's still in a downtrend. There's no uptrend in place currently. What you have here is a series of lower lows and lower highs. So when it peaked right here, this is where it started. And then you created a lower low off of the January lows. It tried to rally, couldn't do it, and then it created another lower low. Then it tried to rally again, couldn't break the previous highs, formed another lower high. And the series of lower lows and lower highs continued all the way into July, and then it rallied again in August, and it looked like it was going to break, but it didn't quite get there, and then it came back down again. But now what's changing here is that we have the potential for a higher low. Now we're only a few days into this, so it could definitely change and make it to where it's just simply a dead cat bounce that goes on to break the lows from July, and then we have a new lower low. But if it can break this declining trend line going off of the January highs, and then it can get back above these highs from August, guys, we have the opportunity to create a new uptrend. But that's not quite there at this moment. There's a lot of work to do, and there's a lot of hazards that have to work its way through. So we have established here that SMH is still in a downtrend. So that's going to affect our outlook on individual stocks. Now, with that being said, let's look at Nvidia. Nvidia also has a downtrend in play, but does it have a potential basing pattern? Is there anything that we can jump on as being possibly optimistic for the stock? The problem with Nvidia versus SMH, if you remember on SMH had a higher low that was trying to be formed. Nvidia has shown no such effort to make a higher low. In fact, it just made a lower low last week. So we got problems here. There's still a series of lower lows consistently being formed on this stock here. So again, we're seeing that being formed in September. But if there's one good takeaway from this is that perhaps there's some support at current price levels, because if you look at this support level going all the way back to mid 2020, you have a pretty solid support level right there at 131. So far, that support level has not broken. and it got tested last week, it held, and since then it has bounced. But what happens if this support level doesn't hold in the future, as it did last week? Then you have some more support under 116. Now we can keep getting grimmer and grimmer about Nvidia and say, okay, well, what happens if it breaks 116? But let's not worry about that right now. Let's just focus on these two support levels. Let's see if these two support levels can hold, especially the 131 area. Because then where does things start to turn around? Where can we look at things getting more optimistic going forward? Well, that really wouldn't happen until this major resistance level at about 189 gets taken out. This is a short-term resistance level that has seen 2 rejections over the last few months. And then if it breaks through that, you have this declining trend line coming down as well that price will have to break through, and it keeps getting lower and lower each day, hence the reason why we call it a declining trend line. So Nvidia, while there's some excitement about it being this low relative to its all-time highs that were reached late last year, there's not enough there to be bullish about the stock. And if 131 doesn't hold, there's a much bigger downside still present in that stock. Now, what about AMD? AMD actually looks a little bit more bullish. It looks very similar to SMH as well. Declining trend line, and that's been the theme with all of these stocks, and most stocks in general even. Declining trend line going all the way back to November of last year. This thing has not broken yet. It was tested in late December, and then it went a long stretch without ever getting tested. Then it got tested on multiple occasions in August. Could not break through it. But what you do have that is a potential inverse head and shoulders pattern. So you have a left shoulder right here. This is your left shoulder. And then you have the head that's trying to form. And then you have the right shoulder. So then the neckline confirms the break, and the neckline connects the highs from the left shoulder and the right shoulder. So where does that come into play at? Right here. So if AMD can get back above this 102, 103 area, it confirms the inverse head and shoulders pattern. But it still has work to do. One, it needs to continue to establish this higher low, and not only just break this declining trend line, and not only just break through this neckline, but create a higher low, because then when you do that, you have a new uptrend in place. Right now, it doesn't have that. It has the beginning parts of one by trying to form a higher low, but we don't know if that's just going to be a quick turnaround where we just go right back down, test the July lows, take them out, and form new lows. In the end, we have to continue to read these charts each and every day, because the next day it can go from being bearish to bullish, bullish to bearish. That's how charting works. It's not a reflection of how you are as a technical analyst or a chartist. It has everything to do with the fact that the stock market is in fluid motion. It's constantly changing. There's plenty of times where I'm looking at a stock and I'm saying, hey, this stock looks bearish. In fact, last week, I saw that with Ford. I was looking at Ford and I was like, hey, there's like this mini head and shoulders pattern in the short term. And in fact, if you look at it on the 30-minute chart, it was much more evident. But then as time progressed and you got a couple more days of price action under wraps, then all of a sudden you started getting this bullish wedge pattern that was forming. And so I couldn't just stick to what I was thinking before about Ford having that head and shoulders pattern. No, it changes. Everything changes day to day to day. So we have to reevaluate our opinions on every stock that we're trading, and we have to consider, is there something that's changing? Now, just because you change your opinion on a stock, just because you change your opinion on the overall view that you have of the market, doesn't mean that you're not a good trader. Actually, it usually means the exact opposite, that you are a good trader because you're willing to be flexible and adapt to the changes that the market is engaged in. And if you're not willing to change, it's going to be very difficult to trade successfully long-term in the stock market. So if you enjoyed this video, I'd appreciate it if you guys could like and subscribe to this channel. Also, check down the membership below. I do a couple of videos for members only each and every day. Worth checking out. Lots of good trading ideas, watch list updates, all sorts of good stuff. So check that out down below by clicking the join button. Thank you guys, and God bless.